Hace unos días pasó la conferencia de Bitcoin 2025 en Las Vegas, Estados Unidos, y en este video te voy a mostrar un poco de todo lo que nos dejó, desde charlas de gente muy importante relacionada a la industria hasta datos que no podés perderte. Empecemos.
Now, people ask me why I tend to be bullish on the future of innovation in this country. Now, I spent enough time in Silicon Valley to recognize the difference between good tech, technology that boosts our productivity, makes our lives richer, that grounds us in the real world and complements our day-to-day lives. That's the good technology, but there's also some bad technology out there. And when it comes to crypto, I think the last several years have made it clear that we're talking about genuine, ground-up innovation, one that's already improving the well-being of tens of millions of our fellow citizens. I believe it's 50 million Americans own Bitcoin, and I believe that's going to be 100 million before too long.
Well, Bitcoin's the only digital commodity, and if you're going to be a public company, then you need to be capitalized on a commodity. And Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset, right?
A lot of people look at Triffin's dilemma as this dilemma that we have to constantly flood the world with dollars, which is endless debasement, and then hollow out the middle class for this. And I think a lot of people use that sort of like as this an excuse of like, we can't get ahead, we're bound for failure and things like that. But I don't know if that's necessarily true, especially in light of having Bitcoin today. And so it's possible that we have this neutral reserve asset, Bitcoin, that's able to soak up a lot of this extra liquidity that's being created. And so you typically think about this endless amount of dollars that have to be created to continue to feed the world. And that would cause a lot of inflation. Some people might say that causes asset appreciation, not inflation. We're consumers, we buy houses, we buy assets, it's the same thing as far as I'm concerned. But when we have a neutral reserve asset like Bitcoin that can suck up a lot of that monetary premium that may go to houses, might go to asset prices, it sort of allows the system to continue potentially shielding us as consumers from being priced out of homes and being priced out of other assets, and at the same time, being able to use Bitcoin to really outperform inflation.
Obviously, it's been a historic run for IBIT and really for the whole Bitcoin ETF category in the first 16 months of life, really unprecedented in terms of the level of demand and adoption that we've seen. But I think it's important to still remind ourselves that it's very early in the life cycle of an ETF. In many instances, it takes multiple years to truly kind of get all the cylinders firing in terms of the journey that you have to go on from an education perspective, from an institutional diligence perspective, from all the big wealth advisory platforms who each have their, very intensive, typically multi-year processes where they vet these new products first to, just allow their advisors, their tens of thousands of advisors to add them to client portfolios, but then the whole other step up from that, which is to actually consider putting these in model portfolios, right? And so 16 months in, we're actually still pretty early.
When you think back to the last couple of years and these emerging nations trying to figure out a way to get away from the US Treasury, right? So once something happened back in 2022 when Russia attacked Ukraine and we shut off the SWIFT access to them, which is their payment system for the world. And then we seized their US Treasuries, which was, we can all agree, was a monumentally stupid tactical play, why would we do that when we need the entire world to buy US Treasuries? Okay, so that leads us to the BRICS nations getting together, Brazil, Russia, India, China, South Africa, and they're looking for a way to get away from the US Treasury. And so they're looking for a cross-border payment system that would be neutral. And so you have those countries like that who can't really even trust each other, right? So you've got, are they gonna go on a gold standard? Then how is that gonna work? Are they going to audit each other's gold reserves? You think that Putin's gonna let in Shin to come audit their reserves? Likely not. So what is a what's an asset that they can use that would back whatever currency that they're going to use, or what's a currency they could use that would be trustless? Well, it's an obvious answer. It's Bitcoin.
16 years later, and $2 trillion of proof later, and after who knows how many millions of pages of wisdom have been delivered to the world, I'm able to give you this speech. But someone much greater than me, Satoshi, with none of that information, with none of that proof, with none of that time, said this many, many years ago, the most important 12 words in the English language. It might make sense to get some in case it catches on. Thank you.
First of all, what's the problem? What are we out here to solve? Why are we all here on the Vegas Strip? Well, the problem is fiat currency, right? I call this the vicious fiat cycle. The problem is pretty simple. When the US government and the Federal Reserve prints dollars, those dollars become worth less. That makes the life that we all want further away, unachievable, not affordable, right? That then forces everyone to borrow. You get into debt. People are using credit cards, student loans, buy now, pay later, mortgages, all right? And this now has forced households are over $18 trillion in debt. Credit card debt's passed $1 trillion in the United States of America, okay? And the US dollar, since it was launched at the Federal Reserve a little over 100 years ago, has lost 97% of its purchasing power. And this cycle repeats because all of our paychecks in this room, I don't care who you are, all right, I don't care if you're Donald Trump, Michael Saylor, it doesn't matter. None of our wages are keeping up with the inflation of all of our assets. And this is the problem. This is why we're all here. I call this the vicious fiat cycle, right? And if you look, I mean, this is the growth of debt in the United States of America. If you're a millennial, if you're my age, if you were born in the last 20, 30 years, you want to own a car? Debt. You want to own a house? You can't afford a house. Take a mortgage for the rest of your life. You want to go to school? You want to go to Harvard? Did you work hard the first 18 years of your life? Debt. You need a student loan. You can't ever own assets. You're in a perpetual cloud of debt. This is the growth of credit card debt. And it's not just at the individual and the family home level. This is our federal government. And listen, I know every reporter wants to ask me, Republican, Democrat, left, right, up, down. Guys, it's a bipartisan thing. We're in a debt-based financial system, right? Yes. This is a chart. What shitcoin do you guys think this is? This is the US dollar. The best time to go to Whole Foods and buy eggs with your dollars was 1913. Every other time after that, you're getting screwed, right? Okay, now this is a little bit more interesting. Check this out. So the US dollar, we divorced from the gold standard in 1971. So I'm no artist, but I'm trying my best. That's where my arrow is pointing down on this slide. So you can see once we started to print money, right, and we're divorcing ourselves from the physical realities of Mother Nature, it's really benefited the top 1%. The rich have gotten a lot richer, and the rest 90% of us, we're the ones that have stagnated income, or now it's declining, right? Check this out. This is these red and green lines. These are the prices of a median house in New York and Boston. They're just getting more expensive. The bottom two lines, the gray and the pink, that's our income. We're not getting paid anymore, but the life around us is getting more expensive. Here's another one. How long does it take to save for a house? Well, while we were on the gold standard, it was a few years. Off the gold standard, it's a decade, right? This is my favorite. Okay, debt to go to Harvard. Okay, debt to get a house. Okay, debt to own a car. Debt to watch Justin Bieber? Debt to get a chicken sandwich? This is the problem with fiat currency. They print it, it becomes worth less. Our lives suck and get worse. We get in debt, we never escape it. We are slaves to the system, it is our burden to carry.
So this chart shows the Social Security Trust Fund. And as you can see, it went from 0 and it rose to about $3 trillion on that chart. And the reason for this kind of change that's happened over time is because of demographics. So the baby boomer generation was an unusually large generation born from the late 1940s into the 1960s after the World War II. A very large generation. And when they entered the workforce, they were paying into Social Security. So we had this big ramp up in the amount of funds that were invested. Now, unfortunately, they didn't invest Social Security very well. They held it in U.S. Treasury bonds, basically, which are not the best long-term investment you can make. And according to the Social Security Administration's own numbers, by about 2035, they're going to deplete that trust. And what that means in practice is that they're going to spend down this $3 trillion into the economy. That's as the baby boomer generation enters their retirement years, which they're already doing and they're going to continue to do, this is going to continue to roll over. And if you notice, this kind of hit a peak in the late 2010s. So 2017, 2018, it was kind of hitting its peak and kind of starting the very early process of rolling over. And that's when deficits decoupled from unemployment. And that's when the federal debt growth started to exceed private sector credit growth. A lot of this timing happened because at around the same time, interest rates stopped going down, and the baby boomer generation that funded a lot of this on the upside is now in drawdown mode. So this is getting spent into the economy via healthcare, via travel, via housing, basically everything that people have to spend money on. And so this is a background expenditure that's going to go back into the system over the course of the next 10 years. Now, sometimes that exact depletion date will get pushed forward or pushed back by 1 year, but this is mostly actuarial math. It's kind of inevitable. And importantly, these people vote. Young people protest, but then they forget to vote. This demographic actually votes, and right now, anything that touches the expenditure of this fund is the third rail of politics. Both major parties in the US have vowed basically not to touch Social Security over this time frame. And so this is pretty much set in stone, even in a very politicalized environment. It's one of the few things the parties basically agree on.
The US government needs to finance itself. So why are bonds shitty investments? Well, here in yellow, this is a chart of the total amount of US Treasury debt, and I started it in 2017. And what you can see here is it's indexed at 100, and the supply of debt has gone up by about 80%. And then I index this against the TLT, which is the ETF of long-term bond treasuries, divided by the NASDAQ 100. And so if the chart's going down, that means the NASDAQ is outperforming bonds. And so the outperformance of the NASDAQ is about 80% from 2017 until the present. So yes, you might have made money owning bonds on your coupon, but if you put your money in the stock market, you would have made 80% more. Okay, let's look at the same chart versus gold. Similar story. If you had not owned a US Treasury bond and bought gold instead, you would have outperformed by about 80%. Now, obviously, this is not a gold or stock conference. We're here to talk about fucking Bitcoin. So what is this performance versus Bitcoin? And it's even more dramatic. It's about like 99%. You have outperformed by buying Bitcoin versus buying bonds. And so while there are many investment professionals who'll stand up and they'll tell you, hey, I think the bond market is going to do well over the next year or 2 years, what have you. That might be true. You might actually make money owning bonds, but you'll make more money owning other things. And the goal of investing is to maximize the amount of money you make given the current circumstances, and owning government bonds is not a great trade. Now, obviously, this feeds back into my message of this job that Besson has is very difficult, because as more investors read these charts and understand that they're significantly underperforming what they could be making for themselves and their clients by staying in government bonds, then there needs to be more government action in order to make sure that the US government is able to fund itself.
Eso fue un poco de todo lo que pasó en estos últimos días en la conferencia de Bitcoin 2025. Espero que el video te haya gustado y no te olvides de darle like, suscribirte al canal y activar la campanita para mantenerte informado con las últimas noticias relacionadas a Bitcoin y las criptomonedas. Nos vemos en el próximo video de Cripto Pulso.